All right, all good. Moving to thing number six. If Gary's not careful, we might have to change the name of this thing to the six things for next week. So,
Yeah.
but thing number six, bonus, always giving you more value than ever. Another volatile week for the Magnificent Seven, Gary.
Yeah, so the Magnificent Seven, they have had three horrendous weeks in a row,
Hmm.
and off to a horrible start this week as well. Um, Basically, to cut through this really quickly, these stocks, these are, our mega cap tech stocks. Um, their stock performance has been incredible. And in fairness, it's been on great fundamental performance. But the issue is those stocks have done nothing but go straight up for about 2 years. And as a result of that, they're priced for perfection. And so any earnings that is not perfect, well, that causes a gigantic problem. And so, Meta, which we all know is Facebook, they started the week with strong earnings. They had a 22% year over year increase in quarterly revenue. So, good for them. But one of the things we saw is they've been spending tens of billions of dollars on AI, and people are starting to realize, hey, wait, we're not 100% certain we're going to get paid on this. After that, things got really, really bad. Apple reported a 5% increase in top line revenue, but again, the iPhone, which is 46% of their sales, you're not getting unit growth there. They're losing share in China, which is a big deal for them. To own Apple at this, multi-trillion dollar valuation when they're not selling more units, that's a risky thing. And that's something we've been talking about for weeks. Um, the final Magnificent Seven earnings report for the week came from Amazon. They missed their revenue target. They experienced slowing growth in retail. Their Amazon Web Services, AWS, and advertising businesses did really well. But, after that disappointing earnings call, Amazon stock just got hammered. And the worst part of the week for everybody was Intel, which is not part of the Magnificent Seven, but, it's a big tech company.
Yep.
They had a horrible day. At one point, their stock was down 30% intraday. It closed, I think, I want to say down 25, 26% the day they reported. Basically, they missed earnings. They announced a dividend cut. They announced layoffs. And, one of the things that I've been tracking just because I think Intel is interesting is their 13th and 14th generation i7 and i9 processors are having quality control issues. They're not properly controlling the power draw, and so some of these chips are burning out. And once that happens, there's no fix for it. Intel hasn't made it easy for people to find the fix, to figure out what to do, to figure out if they have a problem or not. As I understand it, and I'm going to admit I haven't done a ton of work on this, but as I understand this, if you have an Nvidia GPU, there's a test that you can do to figure out if you have a problem. But I don't think Intel's making it easy for people to get any kind of like recall or warranty replacements. It's basically, they've been a phenomenal US tech company for decades, but boy, are they going through a tough time right now. And then, Andrew will throw up the chart here, but keeping track over the last 3 weeks, and this doesn't count today's carnage. Again, every stock in the Magnificent Seven is down over the last few weeks. The worst ones, Amazon is down more than 15%. Nvidia is down about 20%. Tesla is down just a tiny bit more than Nvidia. And then you've got Microsoft that's down somewhere between 10 and 15%. This has just been really bad performance all the way around. And again, we're filming this on Monday, August 5th. Those stocks all got hammered again today. I want to say I'm doing this from memory. Actually, let me check. I think Nvidia was down 7%. Yeah. Yeah, here. No, they came back. They had been down, I think, 6 or 7% earlier in the day. They finished the day down 4.2%. But all these stocks were down 2, 3, 4%. And so, that's a lot of market cap. That's a huge part of the indexes. And that's why we're starting to see the S&P 500 and the the NASDAQ dropping. Rob, I think the key part of all of this is people are realizing that these companies have spent tens of billions of dollars on GPUs for AI. And everybody's starting to realize, wait a minute, when are you going to start to get paid on this AI? Is there going to be a financial return on this? And so there's talk from some of these companies that they may cut some of their advanced spending. And that makes people think maybe future earnings won't be as good. That also would be the nightmare scenario for Nvidia, which makes some huge percentage of its sales to a very limited number of customers.
I know that prompted a question for me, Gary, with DKI's position in uranium, pulling that all the way through. Obviously, a key component for the GPU manufacturing and creation. Your response to that?
I think that's a good question, and that's a big reason why uranium has not done well over the last couple of weeks. Our position in it, which is still up 50-60%, at some point was up considerably more. I do think there is something to that. The AI related GPUs have a gigantic power draw. And so we are going to need more infrastructure to power these data centers. In the end, would something like this slow adoption? Maybe. And the reason I hedge on that, there are really two reasons. One is I think you have to assume that humanity's desire for electricity, for power, for energy is only going to go up. The correlation between energy usage and a high material quality of living is about 100%. And, people want to live better lives. And you have, just 3 billion people in India and China alone who want more power and want to live a wealthier, more comfortable material life. So, I think that's part of it. The other thing is this infrastructure, Rob, takes years and years and years to build. It's not like anybody saw, oh, wow, Amazon had a bad quarter and Google might
For
cut
sure.
spending,
Hmm.
right? So cancel the nuclear plant.
Yeah.
That doesn't happen. Just to make the decision and get permitting for a lot of these plants and to get them built could easily take 5-10 years. And the life of these plants tends to be 30, 40 plus years. So if somebody is in the process of going through permitting and planning on building a nuclear plant that would go into service, I'm going to say like 2030, and operate that nuclear plant until 2060 or 2070, I don't know that they're looking at these CapEx plans and saying, well, we're worried that energy demand in 2035 or 2052 will be slightly lower, so we're going to cancel the project. I just think these companies, by definition, have to be looking out somewhere in the neighborhood of half a century. So I don't. I mean, I understand why the stocks are down, but I don't think it's really going to affect infrastructure build yet.
That's why you get paid the big bucks, Gary, for that type of analysis here at Deep Knowledge Investing. That wraps up this week's show of the 5 things, the hashtag Trump, hashtag Bitcoin issue. Alex, thank you for joining us, our celebrity, what was that? PR International Bank of England expert
Celebrity and
correspondent.
politics correspondent, right? With additional responsibilities for the Bank of England.
That's exactly right. As always, please check us out at deepknowledgeinvesting.com. Subscribe to our YouTube channel. Follow us on LinkedIn, X, Instagram. We'd love for you to sign up for a free version of our newsletter. Paid premium version gives you access to premium content material, current recommendation, portfolio weightings, the whole 9 yards there in terms of how Gary and team is navigating the market. Gary, any closing statements from you?
Yeah, two of them. One, just to let people know, I know the markets have been really rough the last few weeks. That may be causing stress for you. One of the things we've done really well at Deep Knowledge Investing is set up hedges, put ourselves in a position where when the market's going down, we tend to outperform. That has been the case over the last few weeks. If you want some help with that, reach out. That's an area where we've been really good at helping people. We also added a new position to the portfolio. We have a small drug company with a phenomenal product The key thing there is I think we're going to be expecting a huge amount of growth for them. It's a really important drug in a known large market. And it's not economically sensitive. This isn't the kind of thing people don't get sick on schedule, based on the economy. So I think that's something that's really interesting, could be very helpful for people. Always, even in bad markets, we are always looking for and finding ways to make money. The other thing is, big round of applause to our interns, Alex and Andrew. Really glad to have Alex on camera with us today. He did phenomenal work this week, heading up the 5 things, and working with Andrew, who this week will be heading up the 5 things. And sorry, Andrew, I got the attribution for that graph wrong. But both of these guys, I think, are doing just really high quality work. They've taken a ton of time off of my hands. They've made things easier for me. They've done great graphs, great writing, terrific job selecting. And so, if you're a young person, trying to figure out career options, and you're looking at this, here are 2 of your peers who are succeeding and doing really well. And Alex and Andrew, I know you'll be hearing this in about 20 minutes or so. Just know, we're all really proud of you guys, and think you're both doing a fantastic job.
It's very kind. Thank you, Gary.
All right, everyone. Thanks so much. We appreciate you watching, and we will see you next week.
Thanks, everyone.